presented by Zenwork Compliance Solutions. I just want to make sure that everyone that's joining, looks like we're having a couple join just right now. This is our 1099 e-filing overview presented by Zenwork Compliance Solutions, and we're very glad that you've joined us today. I am your moderator. My name is Geneva Brock, and I'm the Marketing Projects Lead here at Zenwork. And I've been here for just a little under 2 years now, and my main role is providing compliance content to all of our users. Also on this session with me today is our host, Ed Pratt, and he is our Chief Operating Officer here at Zenwork. He's been here for over 5 years, and he uses his 19 plus years of experience in compliance to prepare you for the 1099 e-filing process. So he's got a lot of experience, a lot of knowledge, and a lot of great information to share with us today. Before we get into the session here, I'd just like to share some information on our CPE credit. So if you're looking for that credit today, you must stay on the webinar for the duration of the session. And if you have any technical difficulties here, we apologize about that, but NASBA has prevented us from allowing any credit due to technical issues. So that's just something to be aware of there. So just make sure that you're staying on the session for the whole hour. Also, candidates are required to answer all 4 of our response questions, and those will come up as polls throughout this session. And then in the follow-up email to this session, we're going to send out some instructions on how you can register for Zenwork University, and that's how you'll get your certificate for the 1.0 CPE credit hours if you do qualify based on your participation in this webinar. And of course, this webinar is not just for our CPE candidates. Anyone is welcome to be here, and we're very happy if you've joined us and you're not even looking for CPE credit. So welcome to everyone. A couple housekeeping items here. If you have any questions, feel free to use the webinar chat box and ask those anytime during the session. Go ahead and pop those in there. We'll respond to those as we go, and then we'll also have some time at the end of this session for a question and answer. And if you'd like to receive any notes from this session, we're going to send that recap email, and that will include the recording of this demo, a PDF of the slides that will be kind of in a print-friendly format so that you can share those with your office. And we'll also send answers to any questions we didn't get to. One thing to note here is we've got questions for you. Those are the poll questions I talked about earlier. And if you're looking for CPE credit here, you need to answer those questions. But of course, we hope that all of our other participants will answer with those as well. Our agenda items for today, we're going to be discussing some compliance changes, what's new with federal e-filing and where is state filing headed, kind of a broad overview, and then also digging into some of the nuts and bolts of those items as well. We're going to explain correction types and processes, and while the correction types and processes may not have changed very much over the last few years, it's still something that we get a lot of questions on. So we'd like to make sure and cover that here and make sure it's something that's understood. We're also going to talk about vendor form delivery options, some traditional methods versus some more modern methods. And we're going to talk about some little known facts about e-filing. Then we'll kind of dive into our platform, show you how to use it, make sure you understand all the different compliance things that we have baked into our platform. And then we'll have that question and answer session at the end there. And before we jump into the session, we're going to go ahead and ask a survey question. And you should see that on your screen now. And the question is, how are you currently filing your 1099 forms? Are you filing on paper? Are you e-filing through the FIRE system on the IRS website? Are you e-filing with a third party? Or maybe this is your first time taking over the 1099 process for your company, and you're not actually sure how you're going to be completing your filing. Go ahead and answer that question now. If you're looking for CPE credit here, just a reminder that you need to make sure and answer this question. And you'll see a little button at the bottom of your poll that will help you submit your answer. So make sure to press that. Just going to give it a little bit more time here. Make sure that we have time to get all those answers in. Waiting on a couple more responses here. And I see in the comment now that we need just another minute to respond. Thank you everyone for your patience as we're getting in these last results. Okay, I'm going to go ahead and close that poll now, and I will share out the results. Okay, yeah, and I'll share out the results now. It looks like most of you are e-filing with a third party, and of course we hope that that's Tax1099 that you've selected. We see also some people are filing on paper still, and then there's just a couple of you who don't know. We hope that however you're filing, that this information we're sharing in this session will really be a helpful resource to you as you're going through. I'm going to turn it over to Ed now, and he's going to get us started on our informational portion of this session.
All right, thanks, Geneva. And welcome everyone again to the session. My name, as Geneva said, is Ed Pratt, and I'm going to walk us through a few slides this morning, and then we'll spend some time in the site as well. Well, first, we're going to talk about some of the new information return filing requirements. There is a new e-filing requirement for aggregated forms for a particular payer or a particular client that you may be working with as an accountant. Box 7 extensions have changed, and then any late forms that are sent with Box 7 amounts, there's a slight tweak to that. I noticed on the survey that at least a couple of people said they're filing directly to the IRS fire system, and so that last one may be more pertinent for you than for some of the other folks. But first, let's talk about the aggregated information return requirement. We've heard some noise that the IRS is actually not going to enforce this year, but it is something that they've been kind of working their way up to. As you probably are aware, any payer, any company entity that had 250 or more forms had to e-file in the past. They've always had to e-file if they had 250 more forms in the past. But the way the IRS did it was that was on a per form type basis. So if I had 200 1099 miscellaneous forms and I had 200 1099 dividend forms, I could file each of those sets on paper because they're different types of forms, and I was under the threshold that the IRS had established of 250. Now what the IRS is doing is modifying that to say that all of your information returns will be aggregated under that payer company. So if you have 150 1099K forms, you have 120 1099 miscellaneous forms, you have 270 forms, and therefore you need to e-file because you have exceeded the aggregated form total that the IRS had established. So that is a new thing. Again, we've heard some rumblings that they're not going to enforce it this year. You know how that goes. Things that are new sometimes get pushed back a little bit and changed. But just be aware of it. If you have a client who is a larger client, they're doing a lot of information returns, they may need to e-file if they are exceeding that threshold. The IRS also, though, I should note, welcomes anyone to e-file. So whether you have one form, whether you have 10 forms, the IRS prefers to receive that in e-file format just because it's easier on their internal processes. With the paper documents, they've got to scan them. They've got to make sure that their readers are putting everything in the right boxes and so forth, and that is all important for them to do, but it also is a time-consuming task for that. Someone just asked a question if W-2 is included in that aggregation. This is for information returns, and as you know, the origination of the W-2 goes to the Social Security Administration as opposed to the IRS. I'll clarify that. I don't recall seeing W-2 as an inclusion there, separate from the information returns, but I'll clarify that and make sure that the W-2 is or is not included there, and we'll send that out with our follow-up email. The second piece about the 1099 miscellaneous that is different is the Box 7 NEC, and NEC stands for non-employee compensation. It's just your Box 7 amount that gets paid to contractors, gets paid to vendors. Those are no longer eligible for the automatic 30-day extension. And this has kind of been a progression on the IRS's part. So 2015, Congress passed the HIRE Act, and that HIRE Act mandated that the IRS move the 1099 miscellaneous Box 7 and the W-2 due date back to January 31st. It had been March 31st like all the other information returns, but they required that be moved back to January 31st. It was a painful adjustment for you accountants and your clients. It was a painful adjustment for small businesses, but they did make that requirement a couple years ago. And now that we're kind of accustomed to it, they're kind of removing another peg. What they're doing now is they are saying you can no longer receive an automatic extension for the Box 7 amounts. So again, in the past, you've been able to get an automatic 30-day extension for Box 7, for W-2. You could get an automatic 30-day extension for any of the other information returns as well, simply by filling out the form and signing it and sending it in. You were entitled to that automatic 30-day extension. You can still get that for your dividend forms, for your interest forms. You can still get it for 1099 miscellaneous Box 1 rent amounts. What you can't do any longer is get it for the Box 7 non-employee compensation or the W-2. They have a couple of safe harbors that we'll talk about in just a moment, but the important highlight here is that if you have a client who can't get their data, or you're not able to get their data from the client in a timely fashion to file those forms to the IRS on paper or on e-file by January 31st, you're going to need to pay close attention to what the safe harbors are going to be here next, because there are very restricted qualifications for getting that 30-day extension for Box 7 or for the W-2. Here's what they are, and if you look at the form 8809, we offer that form in Tax 1099. It's also a PDF form that you can download and use from the IRS. But if you look at that, it lists what they call safe harbors, where a client could still work with could still get the 30-day additional time. However, it's not going to be an automatic. It's going to be something that's subject to review by the IRS. You can see that some of these, that these first three at least, are fairly standard types of things that you might think of if your client is in a federally declared disaster area. So they've been a victim of the California wildfires, they've been a victim of a hurricane, or any other federally declared disaster area. Then they can qualify for that additional 30-day extension on the Box 7 or the W-2. If there's a fire, a casualty, natural disaster, something that causes their information not to be available. So you can imagine outside of any federally declared disaster area, sometimes buildings burn down, and with those buildings that burn down, the record keeping burns down as well. So if that's a situation for one of your clients and they can't file based off of that, they can get a 30-day extension through this safe harbor process. And then the third one is the death, the serious illness, or the unavoidable absence of the filer of the information returns. That would be if a person at one of your clients is typically doing that filing on behalf of the client, and they are terminally ill, or something is going on where they're just not available to make that filing for the company. Then that is another time that the IRS would be willing to at least look at and review the situation to determine if a 30-day notice would be warranted in their particular situation. So basically, all of those are where the business is unable to resume operations or obtain the necessary records in order to do the filing that they might need to do. They've got a couple of more. And again, as you look at the 8809 form, these will be on there. If you have a client who is a new business for a year, they can get a 30-day extension of time to file for those for that first year. The IRS is, I guess, somewhat understanding of that situation. It's a new business owner. They're not accustomed to doing all of the paperwork that may be required to run a business, this is where it's really helpful for them to hire an accountant like you guys, so that they can get all that done, because you guys know what you're doing, you know what's due and when and how to do all of that. But if they are working independently, they want to file this themselves, then they can get a 30-day extension. And then the last one is filers who did not receive timely data on third-party payee statements. That's a bit more of an obscure one. It came up in the comments portion of the review of the 8809. Whenever the IRS makes changes to a form, they open it up for public comment, and that was something that came up for public comment there. And so they added it in as an additional way that you can get the 30-day extension if they didn't receive timely data on third-party payee statements, and their examples were K1 statements, third-party sick pay statements, things like that might be required. All right, so with that, I'm going to flip it back over to Geneva to pull up the second survey question.
Yeah, thanks, Ed, for all that information. We're going to take just a second here to kind of process that information, take a break with this survey question. Which box on the 1099 miscellaneous form is no longer eligible for automatic extension through that 8809 form? Your choices here are box 1, box 2, box 7, or box 14. Just a reminder here that if you're looking for CPE credit, you do need to answer this question. Giving it a couple more moments now. Looks like we're waiting on just a couple more people to respond. Okay, I'm going to go ahead and end the voting here and share out these results. So it looks like most of you understood that the box 7 is the box on the 1099 miscellaneous form no longer eligible for that automatic extension, which that is correct. That is the non-employee compensation box. And if you've been relying on that 30-day automatic extension in the past, here's just your reminder to be aware that you're not going to have that safety net to catch you this year. That's something to be mindful of. I'm going to pass it back over to Ed now, and he'll continue talking us through some more information.
Thanks, Geneva. And we're going to continue on with some of the federal changes here. The late 1099 miscellaneous box 7 forms need to be submitted separately. If you're using Tax 1099, we're already taking care of this for you. You may know from back when the IRS did change that due date to January 31st. If you submit at the same time forms with box 7 and forms with, say, box 1, for the 1099 miscellaneous through Tax 1099, we actually split those up. We send you two different reference numbers, one for the box 1 form, one for the box 7 form. And that is because the IRS has kind of, again, been heading down this path for a couple of years, so that they would eventually be able to impose this penalty on the late filed forms. So in the scenario here, this would be for people who are filing directly to the IRS themselves, or maybe you're still filing on paper, and so the box 1 form has a later due date. It's got a March 31st e-file due date. It's got a February 28th paper file due date. If you are sending them out yourself, and you've already sent your box 7 forms, you worked with your client, they had 1099 miscellaneous with box 7, you sent all those out on January 31st, you were good to go on that. Then suddenly the client remembers, oh, I totally forgot to tell you that in May I hand wrote a check to this guy who built some shelves for me, completely forgot to enter it into the accounting system, don't have any paperwork on it, but here's the check. Here's the stub that shows that I paid the guy. Please send him a 1099. If they do that in February, then they would, there's a possibility that you might take that February form with the Box 7 amount on it, you might send it in at the same time as the Box 1 amounts on it. If you do that, they're going to consider even those Box 1 amounts late because they were submitted with a late Box 7 form. So the key message here is to make sure that all of your information is being sent separately. Keep your Box 7 forms out of your other forms. Make sure that they are being sent separately. And again, we do that automatically for you as just a natural business operation for what we do. But if you're doing this yourself, relying on paper filing, then make sure you are keeping those separate. Kind of related to this, there has also been some talk of building a completely separate form for the Box 7 because the rules have changed so much for Box 7 only on the 1099 miscellaneous, and all the other 1099 miscellaneous boxes kind of adhere to the same due date, the same penalty requirements, and so forth. There's been some talk at the IRS about creating a separate 1099 NEC form or non-employee compensation form. I heard a little bit about that at one of the sessions I was at in the IRS Tax Forum in Orlando back in September, but they haven't gotten there yet, obviously. But it's just something to keep an eye on, and that we'll certainly be keeping our eyes on in the next couple of years. All right, so now that we've talked a little bit about federal, let's talk about state filing. As Geneva said at the opening when she was introducing us, I've been here for 5 years, and in that time I've sometimes heard I didn't even know I had to file 1099s to the state. I've never done it before. I didn't know I had to do it, and so why should I have to start now? Well, the states obviously want to get as much information as they can. They want to know about income that's flowing to primarily the residents of the state, but sometimes to people who are working in the state, sometimes to from business owners who are um, headquartered in the state and then paying people to work either in the state or out of the state. So there's a variety of different rules. As you may be aware, a lot of states participate in the combined federal state filing program. That is a program offered by the IRS where vendors like us who are participating in filing to the IRS fire system can help our clients by checking a box that allows that information to pass through from the IRS to the state. The problem with that from the state's perspective is that the IRS has been slow to get that information out to the states. It may be June, it may be July, before that information actually passes over to the state. As you would imagine, if you're the state, you've already received the refund filing from the taxpayer saying, hey, I paid this, this amount was withheld, and I'm due back X in my refund, and they've already paid out that refund before they get the information back about the income and potential withholdings from the combined federal state filing program. So what we've seen in the last few years is a move for the states to do a couple of different things. So some of them have just divested themselves from the combined federal state filing program and said we're no longer going to participate in that. We are going to require that that companies send us that information on the same due date as the IRS, the January 31st due date typically. They may require that as a paper filing. They may require it as a CD-ROM. They may require it as an e-filing. Each state has its own requirements, and they are having um, some regulations passed within the state so that they can make sure that they are getting that information as soon as possible. I would anticipate that to continue as long as the IRS is still kind of slow on passing that information along. You know, it's not the IRS's primary role. Obviously, they're collecting the information for federal tax purposes, and then just kind of offering this add-in for states as an enticement to share the information. But the states who really want to get that information earlier are likely going to continue requiring that separate filing to be done. We keep track of that, so we do monitor the various state filings, and we keep track of that so that you don't have to primarily. And we will be able to file to any of the states that do require it, whether they're participating in the combined federal state filing program or they're Pennsylvania and Oregon and Massachusetts or one of the other handful of states that require a separate filing. We can do that. There is a separate situation for some states where they do take the combined federal state filing program, But if you have any withholdings on the 1099 miscellaneous form that need to be reported to the state, they'll require that form to be submitted to the state, and we can handle those situations as well. So just keep in mind that that states often do have a filing requirement. If they don't have any income tax, obviously they don't have a filing requirement, but states do often have a filing requirement. It can sometimes be met by that combined federal state filing program, but sometimes they do require a direct filing, and we're seeing more and more of that as we move forward. Next, just want to talk briefly about corrections. There are a couple of different types of corrections, and again, this is something that just over the years it keeps coming up as a question. The IRS, if you have a fairly straightforward correction, that would be, I need to correct the amount I reported $15,000 in box 7, and it should have been $5,000 in box 7. They want to get that just as a corrected form. It's a very straightforward process. It may also be that you just reported it in the wrong box. So I reported $15,000 in box 7. I should have reported $15,000 in box 1. I submit a corrected form with 0 in box 7 and 15,000 in box 1, and everybody's happy. The second scenario is a little bit more challenging. That's where you have filed a form with an incorrect vendor name or taxpayer identification number. That is something that that we see come up. And the process for that one is, again, more cumbersome because you have to void out the incorrect form first. So if I submitted a form for a taxpayer with their identification number ending in 89, but it was supposed to be 98. I just transposed those last 2 digits, which is easy to do. Then I have to submit a corrected form to zero out that original form under 89, and then file a brand new form, a fresh regular form with the 98 on it for the taxpayer identification number. So it's a 2-step process in that situation. A couple things more just to point out here that aren't on the slide. One is if you're using Tax1099 and you schedule out your due date and you get information that says that form needed to be changed before the scheduled filing date occurs, then you can edit that form in Tax1099. You don't have to file a corrected form. You can still excuse me, you can still file a corrected form, but you don't have to file that corrected form in that particular situation because you can edit it inside of Tax1099. And another thing that we get questions about a lot is my vendor moved, they've got a new address, do I have to file a new form for that? You don't have to file a new form, a corrected form for the address change. The only reason you might want to do that is so you can mail that form directly to them with the corrected information on it. Sometimes the payer will ask, or the payee will ask for that, and so you can do a corrected form in that situation, but there's no requirement from the IRS's side to file a corrected form for the address change. And just one more that I'll mention is back to the type 1 corrections. Again, last year, it might have been 2 years ago, but here in the last couple of years, the IRS established a threshold for doing the corrected amount forms. If you have issued someone a 1099 statement and you were within $100 of the correct amount, the IRS isn't going to require a 1099 to be corrected on that. So if you sent a form with $1,000 on it, and it turned out that the correct amount was supposed to be $995, you don't have to do a corrected form in that instance, unless the payee, the recipient, says, no, 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 give me that corrected form. I have to make sure that I have the $995 on it. That would be where where you would have to do a corrected form now. But it's just a little safe harbor that the IRS established to prevent you having to do too many corrections, as long as the payee didn't demand it. And with that, Geneva, I'm going to pass it back over to you for the next survey question.
Yeah, so let's just jump straight into that. If I need to change a dollar amount in a 1099 miscellaneous form that's already been filed, already been submitted to the IRS, what type of correction is that you would need to make? Is it a type 1 correction? Is it a type 2 correction? Go ahead and put your answers on that screen. Make sure you are submitting the answer to the question. We're getting a lot of responses here. Thank you so much for your participation with these survey questions. I'm going to give it just a little bit longer, make sure everyone has an opportunity to answer that here. We're waiting on just a few more. Go ahead and submit your answers now. Okay, I'm going to go ahead and end the voting here. And let's see what people thought. For a dollar amount correction, what type of correction? A type 1 correction is what you'd need to do there. And that's the more simple of the two types of corrections that Ed described. You won't have to void a form and create a new form with this type of correction. All you'll have to do is submit one corrected form, making that correction to the dollar amount in the box. Thanks again for participating with those survey questions. I'm going to turn it back over to Ed for some continued information.
All right, thanks, Geneva. So let's discuss the vendor form delivery options here. There's always the appropriate and applicable traditional method to send the form to the recipient, and that's via paper or through the mail. You can print and mail those yourself. We've got PDFs in Tax1099. If you're using another service, they probably have something similar. If you're doing the printable forms wholesale, you're just doing paper filing, then you've got a paper copy that you can send out. And there are third parties that that will contract with you to do the postal service fulfillment for the form. So if you're a large employer, or you're an accountant who has a client who's a large employer, that may be a viable path for them. Recently, or more recently, I'd say over the last 10 years or so, there's been more electronic delivery that has been available, whether that's by email or through a secure portal, and that is something that that the IRS, I don't know if they encourage or discourage it, but they definitely have some rules around sending electronic forms out, and just a few things to know about that e-delivery. We do offer it here, but make sure that you have a permission from the vendor to receive that form electronic format. If you're sending the forms to them via email, you can just collect an email from them that says, yes, I'm happy to receive my 1099 via email. If you have a portal usually has the opt-in being tracked. As people go in and log in to the portal, they're generally accepting terms and conditions, and part of that terms and conditions is often that they will accept delivery for the statement through that portal. We do have a portal and can manage that process for you if it's something that you're interested in. But kind of the key here is just making sure that you are getting the authorization from the contractor, or if you're sending W-2s from the employee, that they will accept that form electronically. They can always rescind that permission, and there's some, again, rules around what you need to do to make sure that you have a process in place for them to rescind that, or for them to tell you that their address has changed, and how to get the PDF so that they can download the form and things like that. But just a few things about electronic delivery. A couple of little highlights here about e-filing. The IRS, going back to the paper filing that I was talking about earlier, the joint submission for forms. If you're paper filing, the IRS really just wants to get one submission from you for that client or for that company. That's, again, because it's just challenging for them to pull all that information together, to scan the forms in, to then correlate the 1096 and the 1099s together, and make sure that they've got everything kind of cross-tabulated so that it's working correctly and reporting correctly into their databases. With e-filing, obviously you don't have to care about that. You don't have to worry about that. There's no 1096, which is the second bullet point there. The 1096 is not required when you e-file. The e-file replaces the 1096. And because it's so much easier for the IRS to take the data from the electronic format, they don't care if you submit 5 times, 10 times for the same payer. In the situation where your client maybe said, "Yeah, I've got everything in there. It's January 15th. I'm good to go. Let's close the books for the year." And you said, "Cool, let's do it." And you went ahead and did it. But then they come back 2 days later and they say, "Oh, I forgot about this one." Then 3 days later, "Oh, I forgot about that one." And 5 days later, "Oh, I forgot about that one." You can continue submitting those separately through an e-file service, and there's no problem with those being being sent separately as part of the e-file. Again, 1096 not required, so you don't have to do it, which is helpful if you have used paper forms in the past, and maybe you've gone to Staples and bought the boxes. You might get 25 1099 miscellaneous forms. You might get 3 1096s, and so if you filed all 3 of those 1096s and it's now late January, Staples might be out of those boxes. If it's February, March, April, you have to do a corrected form. You still have to do a 1096 with that, and so you may have a problem coming up with that 1096. So e-filing just gives you a slight advantage there of not having to have that paper on hand. And then the separate state filing, we've talked about state filing. Sometimes there is a state filing required, but oftentimes the states will accept the combined federal state filing program. There's about 30 states that accept that combined federal state filing program. A few things that are new in Tax 1099, and so we'll go into Tax 1099 here in just a moment. But we've got a new two-way sync for recipient information inside of Tax 1099, so we can send information to QuickBooks Online, to Xero, to Bill.com. As you may be aware, we can collect W-9s. We can do 10 matches, so you can really kind of build your vendor process inside of Tax 1099. You can solicit the W-9 for your client or for your company. You can then do the 10 match for that individual or business that has returned the W-9, and then you can select the option to send that information back over to QuickBooks Online, Bill.com, or Xero. That information, when it goes back, will add a recipient if that recipient didn't exist before. If you had different information with the same taxpayer identification number, it will update that vendor. So it will work with those tools to update that information or add that information for the recipient. And it also passes over the PDF copy of the W-9 that we've collected. So it will attach it to the vendor record in those softwares. In prior years, we weren't able to block a single form out of a larger submission. So let's say you submitted 10 forms through Tax 1099. You find out later, before the IRS e-file date, you find out that one of those was a C corporation, didn't need to be filed, or that all of the payments that were made to that recipient were actually expense reimbursement. They weren't true 1099 amounts. You had to block the whole reference number, the whole 10 forms, and redo the 9 that you needed to do. So we've built it so that you can get around that now. You just block the submission of the single form out of that batch that you might need to do. And then we've built a notice management feature for our enterprise clients. It's an additional add-on for enterprise clients that may help if you're working with tax and you have clients who receive notices. It gives you some capability there, some templates and some tasks that help you make sure you're not missing any of the steps as you're going through that notice project. Speaking of enterprise accounts, if you're working at a larger firm or working somewhere where you have multiple people engaged in the 1099 filing process, the enterprise might be something to look into. There are workflow and user management options built in there where you can specify which companies an accountant may have access to, which of the clients they may have access to. You can specify what rights they have in the system, what they're allowed to do in the system. Based on each of them having a separate login, you can really distinguish down to the unique individual to see what they are able to do. There's also an audit trail for each of those logins, so you can tell who filed a particular form, who maybe has interacted on that client, and then there's 250 10 matches that are included in there. All right, I'm going to bring up my desktop now. Give me just a moment so I can share my screen with you guys. Take just a moment. All right, so I'm going to log into Tax 1099 here, if you've not logged in before, it's easy just to build an account. The account itself is free, so you can go out and build that account. I'm going to be logging in, and I'm going to be in an enterprise edition here. So you'll notice that I'm in an enterprise edition. The first thing that comes up for me is Bill.com. I am linked into Bill.com from the App Center in Bill.com, so it always comes up here with the Bill.com. But generally, if you're not linked to Bill.com, you will go here to the dashboard. And so on the dashboard, a couple of things that I want to point out. Down here at the bottom, you see the different color codes for the stages. Because I'm in an enterprise account, I have these additional 4 that relate to the workflow process that I mentioned. You might have some that are submitted for review, some that are have been reviewed and approved, some that have been reviewed and rejected. And then after they've been rejected, that data entry person may have come in and resubmitted them for review. So if you log into your account and you're not an enterprise user and you just see these, don't panic. It's okay. You're seeing what you're supposed to see. It's just a few additional options that you might see for an enterprise client. Something that we added this year at the request of some of our larger accounting firm clients, there's a client ID that you can attach to the payer. It's a box in the payer record, or it's importable on the Excel side. If you're using the Excel import, you can import the client ID for the payer. And then if you have a client ID associated to a payer, you can search here for that client ID, as well as searching for a TIN or a part of the name. So it's just an additional option for you to be able to go in and search and maybe find that by a client ID, which is useful to accountants, but would be meaningless to the rest of us. I'm going to flip over real quickly to the QuickBooks desktop import. As you may know, we're Intuit's preferred provider for QuickBooks Desktop, and we offer a couple of different ways to import the information. We offer a plugin, and we offer a web connector. One of the things we did this year is we built a series of workflow questions, and we built them primarily for people who don't interact with the software very often. So, a business owner who is just filing once a year, as opposed to accountants who may be filing for a dozen, 100, 5,000 clients over the course of the year. But it can be useful for accountants too, at least as you're going through the first process of the year, because what it will do is give you some Q&A and then make a suggestion at the end as to whether you should use the plugin or you should use the web connector based on the answers that you've given. Now, if you are an accountant, you're used to doing this all the time, you can click on an existing client into the process, you can exit, and it will just dump you back out to the page out here that lets you pick which one you want. But if you're not familiar, you might go through the survey questions, a wizard here, and it'll ask you a series of questions. So first of all, are you using a currently supported version of QuickBooks Desktop? So 2016, 2019, you can say yes. Next, are you on a company network with a firewall, a proxy server? Do you have any virus installed? If I say yes to that question, then I'm going to be pushed into the answer to use the QuickBooks Web Connector. Typically, we've found over the last couple of years working with Intuit that if you are in that situation where you have your QuickBooks hosted on your network, it's oftentimes easier to use the web connector than it is to have your IT person come and install the plugin on your network. Or if you're using an antivirus that's very strict, a lot of companies are very locked down these days, which is a good thing for security purposes. That plugin is an executable file, and so your antivirus, your firewall may not permit that to be downloaded and entered into on your computer. So it can be helpful just to come in and do the web connector instead, and so it's going to direct you out to the web connector. Now, I've gone out and done the web connector, or I've answered the questions and gotten my answer now to which one I should do. But I can always click back under Import and click on QuickBooks Desktop, and it will re-engage that wizard for me, and I'll be able to go through that process again. So even after I've answered the questions once, I can come back in, I can answer the questions again. So I'm just going to change the pathway this time and say no. The next question is, are you in a hosted environment, right? Networks, Insync Cloud, and so forth. If I said yes to that, I'd go to the web connector. I'm going to say no. Do I have administrator privileges on my PC? In other words, can I download programs onto my PC? If I said no, I'd get the web connector prompt. I'm going to say yes, and it'll continue me on in the wizard. And then am I an administrative user in QuickBooks Desktop? Do I have permission as a user of QuickBooks Desktop to add programs to QuickBooks Desktop like our plugin? If I said no, I'd go to the web connector. If I say yes, then I'm going to get another question about, do I have access to QuickBooks Desktop? Now, if you're a sole proprietor, then obviously you do have access to QuickBooks Desktop if you've got it on your computer. But if you're in an office with 5 or 10 people, you may or may not have QuickBooks Desktop on your machine. It may be loaded onto a server and everybody accesses it from the server. It seems like it's on your desktop, but it's actually on the server. So that may be, again, where an IT person can help and install that on the server. But if I say yes to this, I have access to the PC or server, then I'm going to get the prompt to go to the plugin. When I click OK there, it's going to take me into the plugin. So again, just some things that we've done this year to help you decide if you're going to be able to use the plugin or be able to use the web connector better. And so it'll guide you through that process. And really, the tools work the same way. They deliver the same information, I should say, from QuickBooks, whether you're using the plugin or you're using the web connector. We're just trying to help you determine which might be the better path forward for you. The next thing I want to look at is under Manage Recipient. I mentioned the two-way sync, so I'm going to come over here to Manage Recipient, and I'm going to actually pick a different company when my page loads here. I get some delay when I'm working through this video service here. I'm going to pick this one because I've got some stuff in this one. So in this class action client, I've done some things here. I've requested W-9s to be sent. I've got W-9s that have been completed. So if I had just done this W-9 here and I'd gotten it completed, gotten it back, I might request a 10 match, and when I get the 10 match back and it's accepted, it's in a green status there, I can select that vendor, and I can sync that back to Bill.com or Xero or QuickBooks Online. And again, what that does is it syncs it back. It lets me send my new vendor information over or my updated vendor information over, and it attaches the W-9 to that vendor record in QuickBooks or in Bill.com or in Xero. So again, just a nice way to make sure you've got your information in sync with both of the systems there. So you've got everything right there and available. And this is what the W-9 itself would look like once it's signed and put into place there. Something else that we built here that may be helpful for you guys as accountants. You're working with a lot of clients. You may want to pull out all of the payer and recipient data. So this new button here that says Export to Excel for all payers. What I can do in that situation is, if I know I've got a dozen payers and each one of them has between 5 and 10 different recipients, they're all getting 1099 miscellaneous forms, I can go ahead and build out an import template by choosing which form I want to put this onto. When I click OK, it's going to download all of my payer and recipient information into an Excel file for me. And that Excel file is, again, directly importable into Tax1099. It is the same as the Excel import template. So all that I would have to do in terms of getting this ready is just add the amounts in. And maybe something that I've got on a spreadsheet, I can do a VLOOKUP for that recipient. I can manage this one client at a time if I want to. So you can see I've got Larry Landscaping there. I've got Quality Builders. And so I've got a number of different companies that are here, along with all of the recipient information. As I scroll over to the right, you'll see the recipient information, and then you see all the boxes that are available to be entered there. Just another little tool that we've built in to enable you to be able to work maybe a little bit faster with your import system. I'm going to go to our page where all the forms go to live after they've been submitted. I'm going to point out a couple of different changes that have taken place over here. So one thing that is available now that wasn't before is, again, an export to Excel for all payers. What this is going to do is allow me to pick a tax year. I'm going to click Export to Excel for all payers, and then I've got different form types out there from that 2015 tax year. So I can download all of my payers' form information at the same time. So all of my clients I can download into one spreadsheet and have that accessible in a spreadsheet format. Very quick download for me. I can also still do this by single payer if I want to. So if I just wanted to get my Class Act 2015 forms, and I can always just export those to Excel here. We've also built in kind of an after-the-fact state filing. So I mentioned state filing and how we can do the direct-to-state filings. Let's say that you're working with a client. They have employees in Pennsylvania, or contractors, I should say, in Pennsylvania, and you decided not to do the electronic filing at the time you did the original submission. You can come back now and you can add that state filing later for any of the 2018 forms that you filed for that client. So you can just create a separate state filing once you've already done the federal filing. You can't do just state filing. So in other words, you still have to do the federal filing with us, but you can add the state filing on at a later time if you should need to. The change schedule date was actually here last year, but this would come into play if you had a situation where it's January 15th, you've submitted your forms, you wanted them to go to the IRS on January 22nd, so you set that schedule date up, but then it gets to be the 19th, the 20th, and you're thinking, well, maybe there's a little bit more that I need to do here. You can back that schedule date up to January 31st, or likewise, if you say, nope, everything's good, you can bring it forward to the current date so that you've got the ability to go ahead and send that scheduled filing out. And then one more thing on this page, we added these 3 columns here: USPS, email, and state filing. You can see for this one down here, I've got USPS requested. What we had seen last year is some confusion from users. They would go through the View, Edit, Submit page. They would submit their forms. They would choose to have the forms mailed or emailed, but they might not necessarily see that without having to go to a report. We've got reports in the system where you can see what the form delivery status was, if you selected postal mailing or whatnot. But this gives you a quicker visual to be able to come in and see, yes, I can confirm I did request postal mailing here. I don't have to request it again. If you did have to request it again, then you've certainly got the option over here in the actions column to send the USPS mail to that recipient, or to bulk send mail for a lot of the recipients. So you have those options here in place. And then while I'm in the actions column, I just want to mention again the block form. If I've got the situation where I filed all of these forms here under the reference number ending in 53, it used to be that I could only block all of them or none of them, but now I can block a single form out of that batch, so that I have accessibility to do that. And then the last thing that I think I want to mention here is if you have filed to any states that require a direct filing, so your Pennsylvanias, your Oregons, your Massachusetts, those will be here. You'll see the form status for the state. That'll all be in here, what date it went out, and so forth. And then if you're doing any reconciliation forms on Tax 1099, those will be here as well. So a separate spot for that. And then one more that people overlook a lot of times is down here at the bottom of my table here. I have my 940, 941 forms. If I've done filings for those, we keep those in a slightly separate place because the payers themselves are in a different database, and so we report them down here differently. So you'd need to come down and find those forms in a different place. Under our new forms, we've added a couple of things. These may or may not be applicable to you, but we did have requests from them from some accounting firms. We've added Virgin Islands and Guam forms. We've got the Puerto Rico forms are coming along here shortly. We'll be able to file to all of the U.S. territories, in addition to filing to the standard federal and states, as you may have been familiar with in the past. And then one last thing, I think that's the last thing I'm going to mention. Under my profile, and I'm set up as an enterprise user, a couple of things that we had requested for our accounting base. You can always come in and unmask the PDFs. So we did build that this year, where you can come in even after they've been submitted to the IRS, and you can unmask the PDFs, which means you can show the full social or EIN on that copy that gets printed for the recipient. For enterprise users, we've built the ability to unmask all the PDFs, just set it as a default at the account level, and so all of the TINs will be revealed on every PDF that you do from that point forward, and that goes to anybody who's working under you in the account as well. Again, only available under the enterprise subscription. And then for the Box 7 amounts, we also set a scheduled date where you can automatically schedule all of the forms to go to January 31st for all of your filings without having to change that scheduled date as you go through and do the filing. And just as kind of a visual reminder, when I am going through my view, edit, submit process. So if you imported from, say, QuickBooks and you went through and you got your green dots, everything was good there. Once you get to this page, you'll have a default scheduled date that will be here. And so right now it's January 10th, because that's the first day that the IRS opens for e-filing. You can change that scheduled default date. You can change that on any of the submissions that you want to do. And you can do that for the regular boxes, non-Box 7 boxes, or for the Box 7 boxes. So you can do for any of those that you may need to. That master control that I showed you just a moment ago will apply to Box 7, and you can set that across the account level. All right, so that was a lot of stuff, I know, and I think we have some questions that have come up. So I'm going to stop sharing here and turn it back over to Geneva to go through any questions that people might have had.
Yeah, thanks so much. And yeah, that's a lot of great information. Before we jump into our question and answer portion, we have just one last survey question here. So I'm going to pull that up now. In order to e-deliver forms to vendors, which is not required out of these? An opt-in from vendors, or is it maybe a secure electronic method of delivery, or a printer? This is just to see if you're awake, if you're alive out there. A lot of information coming at you. We want to make sure that it's settling in. And while you're answering this question, if you submit that response and there's still some time left, go ahead and chat in any other questions that you have in that chat box on the left side of your screen. And we'll try and get to as many of those as we can. We'll most likely respond to many of those by email after the session is over. We don't want to hold y'all too far past the hour.
Geneva, while everyone's responding, oh, sorry, Geneva. I was just going to say, while people are responding there, I did see one of the questions asking about, is it the payer or the recipient for state filing that is kind of the imperative? And the answer is it depends on the state. Oregon requires a filing whether the payer or the recipient is in Oregon. Pennsylvania may only require it if the recipient is in Pennsylvania, or if they're out of state, if they worked in state. They may be a resident of a different state, but they may have worked in Pennsylvania, and so require filing there. There's not a one-size-fits-all answer to the question of whether it's the payer or the recipient. It really does vary from state to state.
Yeah, and that was a great question, Jason. Thanks for asking that one. I'm going to go ahead and end the voting here and share the results out. Looks like most of you understand that a printer would not be required for e-delivery. Thanks again for your participation with all those questions. We've got just about a minute left, so I'm going to go ahead and wrap up this session. Just a reminder that we're going to be sending out a recap email, and you may want to check that social@zenwork.com is one of the contacts in your email address book to make sure that that email comes through. And in that email, we'll have the recording of this session, we'll have PDFs of the slides, and if you have any other questions, feel free to ask those there. We'll also send information about how to get your CPE credit if you're interested in that. Thank you again so much for joining our session today, and a big thanks for Ed and all of his information that he shared. We're really hoping that this helped you prepare for your 1099 season, and feel free to ask us questions anytime. Thanks, and have a great day.